Thoughts this morning. First, I got to take a ride in full self-driving 12.
How was that?
It was mind-boggling. I think this is going to be a bit of a ChatGPT moment for full self-driving. But what it just reminded me of the magic of this moment. Tesla rebuilding their models for how they do self-driving around imitation learning and all this interesting stuff going on over there. Like, I think they probably made more progress in the last 12 months than in the last 7 years.
Wow,
in terms
that's
of
a big statement.
in terms of what's going on there, and it's going to be rolled out here. It's already rolled out to I think 5,000 people, and so like people are going to start experiencing that. And I think we're having more and more of these moments,
Right.
because this substrate we're going to talk a lot about today, AI,
Yeah.
and just the compute, like what it unlocks.
Tesla could be having its ChatGPT moment soon, and you'd be surprised about what it's all about. As of the 23rd of February this year, Tesla was up 8.1% since its last earnings call. However, while this seems like a good improvement in the automaker's performance, the stock price isn't really reacting and reflecting to this gain so much, which leaves investors wondering whether or not Tesla will continue on a slow positive trend, or if the automaker will soon experience a groundbreaking shift in a moment of change.
Times. These are amazing times because we're at the beginning of a new industrial revolution. Production of energy through steam, production of electricity, IT and information revolution with PC and internet, and then now artificial intelligence. We are experiencing two simultaneous transitions. And this has never happened before. The first transition is the end of general purpose computing and the beginning of accelerated computing. It's like specialized computing. Using CPUs for computation as the foundation of everything we do is no longer possible. And the reason for that is because it's been 60 years. We invented central processing units in 1964, the announcement of the IBM System 360. We've been riding that wave for literally 60 years now. And this is now the beginning of accelerated computing. If you want sustainable computing, energy-efficient computing, high-performance computing, cost-effective computing, you can no longer do it with general-purpose computing. You need specialized, domain-specific acceleration. And that's what's driving at the foundation our growth, accelerated computing. It's the most sustainable way of doing computing going forward. It's the most energy-efficient. It is so energy efficient, it's so cost effective, it's so performant that it enabled a new type of application called AI. The question is, what's the cart and the horse? At first it's accelerated computing and enabled a new application. There's a whole bunch of applications that are accelerated today. And so now we're in the beginning of this new era. And what's going to happen is there's about $1 trillion worth of installed base of data centers around the world. And over the course of the next 4 or 5 years, we'll have $2 trillion worth of data centers that will be powering software around the world. And all of it's going to be accelerated. And this architecture for accelerated computing is ideal for this next generation of software called generative AI. And so that's really at the core of what is happening. While we're replacing the installed base of general purpose computing, remember that the performance of the architecture is going to be improving at the same time. So you can't assume just that you will buy more computers. You have to also assume that the computers are going to become faster. And therefore, the total amount that you need is not going to be as much. Otherwise, the mathematics, if you just assume that computers never get any faster, you might come to the conclusion we need 14 different planets and 3 different galaxies and 4 more suns and to fuel all this. But obviously, computer architecture continues to advance. In the last 10 years, one of the greatest contributions, and I really appreciate you mentioning that, the rate of innovation, one of the greatest contributions we made was advancing computing and advancing AI by 1 million times in the last 10 years.
Tesla has made quite a lot of purchases and promises, and probably the most anticipated of all is its full self-driving software. And while Tesla's yet to reach this level for its cars, some investors and analysts remain optimistic that it will happen, even though others simply don't. Now, remember the frenzy around ChatGPT, the language model that could write its own code and left people in awe? Well, if we told you that Tesla with its full self-driving beta is brewing up its own ChatGPT moment, then this one has wheels. Imagine a future where this data-collecting AI masters the art of driving, navigating rush hour traffic with finesse, and does all this with the skill of a seasoned driver. Well, that's what a ChatGPT moment is. And just like how ChatGPT seemingly woke up one day and became a writing prodigy, well, Tesla's FSD could do the same with driving. But how is all of this going to happen? And will it affect Tesla's stock price and valuation? Let's find out.
Yesterday's hot January inflation data prompting a sharp drop in tech stocks. Joining us right now with more on the sector is Gene Munster, managing partner at Deepwater Asset Management. Has the calculation or valuation issue changed, given what we're seeing in terms of CPI? And then obviously what I think folks think Jay Powell is actually no longer going to be doing anytime soon.
Andrew, I think it does. I think it pushes back what that inflection point is. I'm a believer that we're going to get to a 3 to 5 year bull market here powered by AI. But investors need to get on the right side in terms of when we're going to see these rates start to go down. Expectations now, I think, are for June, and my sense is it's probably going to be later than that. I think this is just the most sticky part, and I think is a good reminder to inflation does matter in the near term with tech stocks. And Andrew, just to emphasize this point, it may seem subtle to push back a window by 2, 3, 4 months, but if we look back at 2021, different environment, rates were going up at that time. But the Mag 7 was down 32% in the 6 months from October of 21 when those rates started to peak. And then if you look at the emerging tech within the NASDAQ, that was down 70%. And so rates do matter. I think investors are still off sides when it comes to when to expect some of these cuts. It does dampen some of my enthusiasm because, as I mentioned, I'm very bowled up about where this ultimately is going to go. But investors need to right size when these rate cuts are going to happen.
Given what you just suggested, then, what do? You want to own none of this? You just want to wait? And when would you be in?
So I think that it is wise to be mostly in now because, again, I think we're going to this 3 to 5 year bull market. We talked about the negative lever related to inflation, but there is a massive positive lever related to AI. And investors have struggled about how to kind of capture and guess what the impact is going to be. And my sense is that you need to put this on a spectrum of AI and its impact and other paradigm shifts. And I would put the PC at a 20, mobile 25, the internet 50, electricity at 100, a scale 1 to 100. Electricity is at 100. AI is 99. It would be 100 if it not for you need electricity to power AI. So when you have that perspective, when I have that perspective, and I think about what's going on with these interest rates and inflation and where investors are in the near term, I think you can get kind of misled into worrying about what's going to happen over the next 3 to 6 months. And ultimately, if this is as big of a paradigm shift as I think it is, even if it's half as big, I think we could see the NASDAQ move up considerably, 2x in the next 2 to 3 years.
Tesla's been in the business of making EVs for a while, and in the process, it's earned a lot of trust and support with millions of people, some of whom have invested in the car company. You see, Tesla's been a profitable company since 2020, and it continues to expand its business year on year. But one could ask, is Tesla really profitable? And if it is, will it continue to be so? And when exactly will this ChatGPT moment become a reality? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Tesla's success has only been a bit of its larger puzzle, and its success has demonstrated the viability of electric vehicles and also set the standards for the industry, inspiring other automakers to invest in sustainable mobility. However, not everybody believes that the car company will continue to maintain its profit margins. But that's just one way to look at it. Founded in 2003 by Elon Musk, Jay Straubel, Martin Eberhard, Mark Tarpenning, and Ian Wright, Tesla set out to automate and revolutionize the industry with its EVs and sustainable energy solutions. And while achieving profitability was no small feat, as the car company was facing numerous challenges along the way, Tesla was still able to make things happen. The car company became profitable first, achieving profitability in 2020, and growing to generate $12.55 billion in net profits in 2022. Starting with just $862 million in profit in 2020, Tesla quickly grew over the next couple of years to make $5.6 billion in 2021, more than double that soon in the year 2022 as well. Before we carry on though, guys, if you like this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. As more Teslas join the FSD program, the data pool expands too, and that creates a flywheel effect, where the growing data fuels AI learning, which leads to even better decision-making and faster improvements in FSD software. This virtuous cycle is one that could propel Tesla's self-driving software at an unprecedented pace. Likewise, if you could call, well, there was an initial skepticism surrounding self-driving cars due to safety concerns. So imagine a future where FSD becomes demonstrably faster and safer than the average human driver. That could be a game changer of a moment. Also, if Tesla achieves its ChatGPT moment, it could trigger a domino effect in the industry. Other companies, fearing that they might get left behind, might accelerate their own self-driving car development, leading to much faster than anticipated self-driving cars becoming a revolution. And in the end, it could reshape transportation as we know it, with autonomous vehicles becoming commonplace. This is something even Elon Musk himself has confirmed.
You talk about enhancing humanity. I'm curious then about AI, which many people say will lead to great productivity gains. You showed those robots. I mean, I can imagine what they conceivably could do when powered by AI. But I'm also curious, because you've certainly been concerned, what percentage do you give the chance that it will destroy humanity?
Well, the advent of artificial general intelligence is called a singularity because it is so hard to predict what will happen after that. I think it's very much a double-edged sword. I think there's a strong probability that it will make life much better, and that we'll have an age of abundance, and there's some chance that it goes wrong, and destroys humanity. Hopefully that chance is small, but it's not zero. And so I think we want to take whatever actions we can think of to minimize the probability that AI goes wrong.
And you've called for a pause, along with a number of other people.
Yes, look, when I called for a friend of mine, Max Tegmark, is a physicist at MIT, wanted me to sign on to the letter. And it's like I knew it would be futile.
It is futile.
It's futile. I knew it would be futile. I just wanted to call it like it's one of those things, well, for the record, I recommended that we pause.
Okay.
Did I think there would be a pause? Absolutely not.
But you're starting XAI, I think that's what you're calling it, or some new AI effort. How's it going to be different than OpenAI or Alphabet?
This is not the time to this. It's not. We don't have enough time, and nor is this the moment to really talk about it.
Okay.
We will have a launch event, and we'll explore the issues in more detail. But I should say that and I mentioned this at the shareholder meeting, that Tesla has actually tremendous capability in real-world AI.
Yes.
In fact, it is very far ahead of anyone.
I know people actually on Twitter prior to our interview were saying, he never gets asked about how advanced his AI is at Tesla. You always talk about the other names.
Tesla AI is, like I said, it's like, I'm not even sure who's second, frankly.
Why is that? What are people not understanding about what you have, and why are we talking so much about ChatGPT and generative AI at OpenAI and what Microsoft's going to be able to do with it, and not about Tesla?
I don't know. I mean, people do talk about it online. I think Tesla will have sort of a ChatGPT moment. Maybe if not this year, I'd say no later than next year.
Wait, say that again. I'm sorry. You're going to have a
sort of ChatGPT moment.
Oh, you will. In terms of suddenly it will.
Yeah, suddenly 3 million cars will be able to drive themselves with no one.
Right. It goes back to that. Right.
When Elon Musk said that Tesla will soon have a ChatGPT moment, he was quite simple with that, and it is that itself. Tesla's FSD system will soon reach a level of AI that will astonish and impress the public, just like ChatGPT did. And he might even see this as Tesla's FSD system being able to drive any car in any situation without any human intervention, with a much higher safety standard and efficiency than what we can see now. You see, Tesla's success in the automotive industry is remarkable, particularly as a sustainable and profitable car manufacturer. The automaker's road to profitability has been remarkable, characterized by innovation, perseverance, and a relentless pursuit of its long-term vision. Tesla has gained the trust of investors across the world, with their stock price increasing exponentially since Musk took control of the company in 2008. And while the car companies face numerous challenges, it appears that they have finally reached a point where further profitability is now within grasp. As electric cars become more popular around the world and Tesla's brand recognition grows stronger, the demand for their products is only likely to rise. And with this combination of increased revenues and brand awareness, Tesla should be able to maintain or even increase its level of profitability in the years ahead. One of the key factors in Tesla's profitability has actually been its unwavering commitment to R&D. The company's invested heavily in technological advancements and engineering expertise, allowing it to develop cutting-edge EVs with superior performance and range. Tesla's flagship models like the Roadster, Model S, Model 3, and Model Y all gained widespread popularity for their innovation, design, and eco-friendly nature. And so by continuously pushing the boundaries of EV tech, Tesla was able to differentiate itself in the market and attract a loyal customer base. Another crucial part of this whole plan was Tesla's vertical integration and manufacturing prowess. Unlike traditional automakers, Tesla took a unique approach by building gigafactories, enabling it to control the entire supply chain from battery cells to final assembly. With time, this manufacturing capability did improve, and it will continue to do so, and it will increase production volumes and economies of scale, further contributing to profitability.
You're with us, you talk about generative AI and this revolution that's happening. I mean, it's for real. Even Jamie Dimon, who didn't love Bitcoin, for example, he thinks AI is for real.
Yeah, thank you for having me. It's good to be on the floor here. It's really fantastic what's going on. I think what happened with generative AI is really going to change the way that we interact with technology and computers in general. You know, the way we work, the way we talk to each other, the way really we do anything is going to be transformed in a way that we haven't seen since the dawn of the internet. And that's really where the Nvidia story comes in.
Yeah, I mean, people are naming their kids Jensen. And I was actually showing, that we had the weekly, the New York Post on Sundays does the weekly winners and losers in business.
Yeah.
And Jensen Huang, his picture was right there at the top of the winners.
Yeah.
And, Google's Gemini and the AI miss was in the losers. But your thoughts on how Nvidia is really leading this revolution?
You know, we were involved with Nvidia since 2016, and back then it was simply a story about gaming and GPUs and so forth. And the way that transformed is that these GPUs are really the best thing for all these very massive computational needs that Nvidia really has mastered over the last 20 years or so. So I think what's going on is we're seeing now that Gen AI is out of the box, basically, we're seeing a lot of these big name companies, big consumer companies like Facebook or Meta or Google, investing tremendous amount of money into these computer clusters to have these capabilities, and Nvidia is really benefiting tremendously from that.
And so also about how AI is moving to mobile, people were talking about Qualcomm, for example, and just how it's evolving, right? And I guess everything we're doing will have some sort of AI.
Yeah.
They'll be gathering our information, and I guess will be helping us as well.
Yeah, I think it's going to be pervasive, and that's really why the Nvidia stock has almost doubled over the last 3 months, is because people are seeing how pervasive these tools are going to be, and really any vertical of the economy. So from mobile to software to healthcare to really anything that we do, you're going to have some kind of AI component, and who's going to provide that to you, basically?
Tesla's big success was fueled by forward thinking, which, although it did seem pretty ambitious initially, it has opened the eyes of investors to the unique mode of operation used by Tesla. First, the automaker adopted an unconventional approach by leveraging direct-to-consumer sales, bypassing traditional dealership networks, and you got to think of this as Tesla operating without a middleman. This method allowed the car company to maintain better control over pricing, customer experience, and brand image. Additionally, the company produced a unique sales strategy, with pre-orders and reservations playing a big role in generating revenue before vehicles were even made. This allowed Tesla to provide them with a much-needed cash flow to support its production and operation investments. Tesla itself and its sales volume have increased over time. and the car company achieved economies of scale, leading to improved profit margins, and Tesla's benefited from government incentives and regulatory support for EV adoption, especially in key markets like the United States, Europe, and China. These factors have been combined with a growing global awareness and demand for sustainable transportation, and it all worked in Tesla's favor, driving its journey of financial success. That's not all. Tesla's focus on energy innovation has also played a key role in its journey towards profitability. In addition to providing EVs, the company's developed energy storage solutions with things like Powerwall and Powerpack, as well as solar energy products through its acquisition of SolarCity. These offerings created a diverse range of revenue streams and positioned Tesla as a leader in the clean energy sector, and the integration of these energy products and EVs has facilitated the development and sustainability of their ecosystem, where customers could generate, store, and utilize renewable energy in a seamless manner.
Stirred the pot last week, a little bit, or 2 weeks ago, by questioning the consensus view on Google, which is that they're going to be a big AI winner. I think we called it the $2 trillion question. I tweeted about it.
Yeah.
Mark Suster chimed in and said, I'll take the side that they're going to be an AI loser. But why don't we dive in a little bit? You had this good idea. Hey, let's look at these large cap tech companies through the lens. Are they a winner? Or are they a loser from AI?
Yeah.
So we may as well start with Google.
And I wanted to back up a little bit
Sure.
and borrow a framework from one of my close friends and someone that I think a lot of people have listened to and learned from around investing, Mike Mobison. And years ago, shortly after I first met him, he was teaching a class at Columbia, and him and this guy, Paul Johnson, started talking about an acronym they titled CAP, Competitive Advantage, period. And what they would do is they would take a company's market cap and they'd look at the trends in the company and they would back into the number of years into the future that Wall Street was telling you this company was going to have a competitive advantage.
Yeah.
And by basically counting the number of years it would take in free cash flow to build into the market cap.
Yeah.
And what the point that he made is that, different businesses have different amount of durability. And so, Coca-Cola might only have a 3% growth rate, but it might have a 40 or 50 PE because everyone is willing to bet that 75 years from now, you'll still see Coca-Cola on the shelves.
Yeah, yeah.
Right. Whereas, you look at a company that all of a sudden faces the innovator's dilemma or faces disruption, and this cap can close super fast and it has dramatic impacts on the market cap of the company. I remember when BlackBerry first got in trouble, the valuation just retrenched so aggressively that many people got fooled into thinking it was a value play because it was trading at 10 times earnings.
Yahoo, same way.
Yeah, and what was happening is the people in the know were saying this company's competitive advantage just became quickly undurable.
Yes.
I'm not sure undurable is the word, but you understand the point that I'm making.
Yeah. Oftentimes, because we have a lot of high growth stocks in Silicon Valley, and so they get assigned big multiples. Multiples are a byproduct of a couple things. How fast you're growing, because we're trying to forecast those free cash flows into the future. But also, to the second point, the durability, because we have to assign a discount rate. What's the probability that we're actually going to be able to collect those annuities sometime in the future? And so the less confidence we have about the future, the higher the discount rate. And so even though you may have high growth, we have to discount it a lot.
And Mike has gone on, I think, to talk about optionality, especially around tech companies. Sometimes you have a platform position that increases the optionality you're going to be able to move into other fields, and therefore that would also be a positive. But other people have questioned why these tech companies have high multiples at all, because they're so susceptible to tech disruption, in which case you could argue the other side. But anyway, the reason I thought this would be an interesting way to talk about some of the large companies and AI, I don't think there's a single person out there that is arguing that AI is not some kind of fundamental phase transition, Clay Christensen's disruptive wave or whatever. And in fact, I think the number one way you could probably commit harikari as a public company would be to on your earnings call say, we think AI is full of shit. We don't want anything to do with it. And so everyone's forced to have an answer. And I think one example that's pretty obvious to everyone is Microsoft. I think it became very clear to a lot of investors when they learned about an LLM and what it was capable of, and the fact that it could help write code, and then it could help you write a paper, and it could help you with creative endeavors. People looked at the Microsoft portfolio of assets, especially where they make money around the Office suite, right?
Mm-hmm.
And said, and the developer community,
Right.
where they also, control a lot of the IDEs that are used to program. And they said, oh, this is easy. Microsoft will be enhanced by this.
Mm-hmm.
And we should also add their adeptness at moving quickly with the OpenAI relationship,
Right.
and they were in front of this early.
Absolutely.
And so all three of those things, you go, oh, they're a net winner. And lo and behold, their stock went up and they had multiple expansion.
Yeah, I mean, I think that the first question we ask as investors is this thing real? And what do we mean by real? What I mean by is the juice worth the squeeze? It costs me something to have AI if I'm a customer, right? And is the productivity gains that I'm getting as a business worth it, right? So, I was talking about Tesla, start off the conversation. Well, if this model and this compute and all of this capability allows me to develop full self-driving and to win the automotive market because of that, then of course the juice is worth the squeeze. I think if Copilot allows my engineers to be 30, 40, 50% more productive, then I'm replacing human beings with machines. Of course, that's worth the squeeze. And so I would say that as we sit here in the early
Well, I would even say it another way in the Microsoft case, if you're not using their tool and you're programming without it, you're falling behind.
Right.
And
Tesla's road to profitability was a testament of its unwavering commitment to innovation and success. And it's a very forward-thinking business model. Through technological advancements, manufacturing expertise, and diversified product portfolios, Tesla's managed to emerge as a leader in the EV market. And with a strong focus on customer experience and long-term vision, Tesla continues to shape the future of transportation while steadily driving its financial success. This indicates a significant investment made towards achieving green mobility goals, and Tesla's managed to operate and remain consistently profitable, proving that it is a sustainable journey that could be commercially successful without sacrificing the company's core objectives. And as Tesla continues to expand their product range, offering new vehicles, autonomous driving, and the like, it does actually remain pretty profitable, and it will continue to grow. And who knows, the company may one day be worth $10 billion. Now, while Tesla's ChatGPT moment may not happen overnight, we might wake up to a world where Teslas are confidently navigating complex driving situations, not just replicating human behavior, but potentially even surpassing it. Do you think Tesla can have this moment? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.